Howdy, folks. Welcome to Liberty Call. Today is Thursday, May 4th. May the 4th be with you. 2023. Hope everybody's having a fantastical day out there. No Star Wars music today. Last year I did it, or maybe the year before. And the jerks at YouTube put a strike on there because I had, copyrighted music. It's like, duh, it's Star Wars Day. Anyways, like I said, hope everybody's having a good day out there in the interwebs. It is turning into a nice day here in Colorado. It was gloomy and overcast most of the morning and kind of drizzly, but sun's coming out. My boy Jake back here is wanting to go play some ball. He's been bugging me for the last hour to go outside and play. But told him, hey, we got to wait till after the Liberty Call show. And here we are. All right. If it's your first time watching Liberty Call, I'm glad you're here. Thank you very much. And, ignore my congestion. It is pollen season here in Colorado, and I've been spending a lot of time outside, which makes my nose seize up like a vault. But anyways, again, thank you. I'm glad you're here. Please give me some thumbs up, likes, shares, subscribes, follows, all the good stuff, regardless of where you're watching this. And let's go ahead and jump into the numbers. It was not the best day in the markets, unfortunately. Not quite a bloodbath or anything like that. But, I guess folks have kind of come to the realization that the Fed's not going to cooperate with the markets right now. All right. Dow Jones was down 0.86% today, 286 points, closed at 33,127. The S&P 500 was down 0.74%, closed at 4060. NASDAQ was down 0.49%, closed at 11,966. The VIX was up 9.54% today. It's back up over 20 at 20.09. So again, for folks who maybe it's the first time you're watching, what is the VIX? What does that mean? If you've been watching this for several years, hey, you know what I'm going to say. But the VIX is the volatility index based upon the S&P 500. And when the VIX is below 20, that usually means, I usually look at that as a green light. If we're talking about traffic lights, it's your green light. Things are, volatility is low. Things are relatively normal. 20 to 30, in my opinion, is a yellow light. Proceed with caution. And anything over 30 in the VIX is typically, red, stop. If you want to go any further, you're on your own here. So, all right. So that's what the VIX means. All right. Canada was down 0.57%. Brazil was up 0.42%. And Mexico was down 0.52%. Over in Europe, Germany was down 0.51%. UK was down 1.1%. France was down 0.85%. Netherlands down 0.41%. Spain down 0.36%. Italy was down 0.61%. And let's see here, Switzerland. Switzerland was down 0.43%. And Portugal, a lone bright spot, up 0.36% in Europe. The Russian exchanges were mixed today. The MOEX was down 0.31%. The RTSI was up 1.01%. And the overnights in Asia, starting out, looks like the Japanese markets were still closed. Let's see, Australia was down 0.06%. New Zealand was up 0.6%. Looks like all of the Chinese markets are back open. The Shanghai was up 0.82%. The Shenzhen component was down 0.57%. The China A50 was up 0.27%. DJ Shanghai up 0.51%. Hang Seng up 1.27%. And the Taiwan weighted up 0.36%. All right. So that was today's markets. Ugly here in the U.S. and in Western Europe. Much better overnight. All right, let's get to today's market recap. S&P 500 wobbles as PacWest-led slump in banks. Stokes worries Apple earnings eyed. All right, today the S&P 500 slipped due to fresh turmoil in the banking sector, dampening investor sentiment ahead of Apple's quarterly results. Western Alliance Bancorp, First Horizon National Corporation, and PacWest Bancorp were nursing heavy losses, with PacWest falling over 40% due to concerns that it may be on the brink of a collapse. Yeah, I was looking at the stock charts of PacWest yesterday, and I think it was around $6 a share at the close yesterday, and then the overnights, it was down another like 40 or 50%. And this same stock at the beginning of the year was trading in the 30 range, and then a year ago was I think up around $50 or $60 a share. So it has tanked. All right, back to it. PacWest confirms that it was evaluating all options but had not experienced any outflows in deposits. The move came just days after JP Morgan acquired First Republic as part of a receivership deal after the latter failed to secure funding privately. Investors are still focused on the remaining players that are deemed the weakest in the banking sector despite JP Morgan's purchase. And a lot of people out there are really worried that this is some sort of evil cabal of the banking system to consolidate banks into these big mega banks like Bank of America, JP Morgan, and that will make the central bank digital currency, the CBDC, much easier to implement on the serfs like us who might want to reject that. So, let me take my tinfoil hat back off, and then we can get back to the news. Big tech traded mixed ahead of Apple's quarterly results, with Qualcomm falling more than 5%. After its better than expected quarterly results were overshadowed by guidance that missed Wall Street estimates amid a slow recovery in China. Paramount plunged over 20% after the entertainment company slashed its dividend and its earnings fell short of expectations. The struggles in the banking sector offset optimism about a likely Fed pause in June, with Morgan Stanley predicting that the Fed's conditional pause will be lengthy. On the economic front, there was more evidence of cooling in the labor market as jobless claims rose more than expected. The rise in jobless claims came just a day ahead of the monthly jobs report expected to show the economy created 180,000 jobs in April. Johnson & Johnson's consumer health spinoff, Kenvue, surged after making its debut on the New York Stock Exchange. Many investors are eagerly awaiting Apple's quarterly results to see how iPhone sales have held up amid slowing global growth. Overall, the S&P 500 slipped due to concerns about the banking sector, overshadowing optimism about a likely Fed pause in June. Whew, good stuff there. So again, things are slowly getting worse. It again reminds me a lot of, back in my days at Ameriprise during the last financial disaster that we went through, and just sitting there like on pins and needles every day, like, what the hell is going on? And again, I didn't really have the 50,000 foot view of things that I have today. I hadn't really studied any Austrian economics or, listened to the bright people that I listen to today. But, I had some good guidance back then and some good mentors who kept me out of trouble. All right. Next up, U.S. job market softening, slumping productivity boosts labor costs. The number of Americans filing new claims for jobless benefits rose last week as the labor market softens amid higher interest rates, which are cooling demand in the economy. Initial claims for state unemployment benefits rose 13,000 to a seasonally adjusted 242,000 for the week ending April 29th. The surge in filings in Kentucky and Massachusetts and a gain in California offset a plunge of 9,358 in New York. The labor market, however, remains tight as there were 1.6 job openings for every unemployed person in March, according to a government report. The Federal Reserve raised its benchmark overnight rate to 5 to 5.25 on Wednesday and suggested it may pause further increases, though it kept a hawkish bias. Fed Chair Jerome Powell said the labor market remains very tight, and that's in quotes, but noted, quote, some signs that the labor supply, that supply and demand in the labor market are coming back into better balance, end quote. Despite the labor markets remaining tight, other data showed labor costs surged in the first quarter as worker productivity slumped. Non-farm productivity dropped to a 2.7% annualized rate in the first quarter, while unit labor costs rose at a 6.3% rate from a year ago, marking the fifth quarter that productivity fell on a year-on-year basis, the longest stretch since the series started in 1948. The BLS noted that, quote, no other previous business cycle had lower productivity growth except for the brief six-quarter cycle from 1980 Q1 to 1981 Q3, which exhibited a 1.0% growth, end quote. U.S.-based employers announced 66,955 job cuts in April, down 25% from March, according to a report from the global outplacement firm Challenger, Gray & Christmas. Layoffs, however, slumped 176% compared to April of last year. The claims report has no bearing on the government's closely watched employment report for April, which is scheduled to be released tomorrow. All right. So again, the jobs numbers haven't appeared to deteriorate at a rapid pace yet. Again, I've been saying this since last year. The jobs numbers are a lagging indicator. If I own Ray Ray's Tacos and I got 10 taco makers in the back, and revenue and butts and chairs slows down for a month, I'm probably not going to, terminate anybody. If it's a 6-month trend, yeah, we're probably going to, lay off 2 or 3 of the slowest taco makers and see if we can keep the business alive until the economy rebounds. So again, think of this as a business person. And I know that's probably hard for someone, if you work in the government, that may not be an easy thing to do. But, for regular people, think of your budget. I mean, do you slash and burn your expenses in your household after, 1 month of things being, a little more expensive, or maybe income was down, especially if you're in a sales role and you don't get a consistent paycheck every day or every month. But after a 6-month trend or a year, you go, all right, things are bad. We need to fix this. So, all right. Last up, an article about Mr. Powell. Jay Powell said the banking system is sound and resilient. Now more banks are in trouble. And this was written by Ryan McMacken. This comes from the Mises Wire at Mises.org. Some of the smartest folks on the planet right there. All righty. The Federal Reserve's Federal Open Market Committee raised the target policy interest rate to 5.25%. Marking a 5% increase since February of 22 and the highest rate reached since August of 2007, just before the 07-08 recession. However, this rate hike of 25 basis points is a slowdown from the more substantial hikes made in 2022. The Fed has slowed down despite the fact that the consumer price index inflation has remained at or above 5% in recent months. In his remarks, Fed Chair Jay Powell acknowledged that the U.S. economy slowed significantly last year and that the pace of growth has been modest in this spring. Although Powell pointed to strong jobs growth numbers, he did not present this as a clear indication of the overall economy. The FOMC's press release indicates a policy turn away from monetary tightening, with Powell saying that the committee no longer assumes additional, quote, policy firming, end quote, is necessary. Rather, the committee will look into whether additional firming is necessary in the future. In other words, the FOMC policy and outlook could change at any time, and the Fed has abandoned forward guidance, making policy on a month-to-month basis. Powell has also declared the banking system sound and resilient, but 2 regional banks, PacWest and Western Alliance, showed signs of extreme stress within hours of his press conference. The complacency about the banking sector at the Fed is fashionable. Yeah. It's funny. Like Jay Powell comes out and says something, and then the markets or the economy goes the complete opposite way. It's kind of like Jim Cramer when he comes out and says, this stock is the best you could buy. And then the next day it falls apart. So it is hilarious to watch these talking heads. I have to wonder, they have no idea what's really going on, or are they just saying things that they know are comforting lies? I don't know. All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.